Bitcoin Bulletin is live. Get ready for a rapid-fire crypto update that's going to blow your mind. First up, we're diving deep into how companies like Smarter Web are revolutionizing treasury management with Bitcoin, but can they navigate the wild volatility and shifting regulations? Then, buckle up as we explore the SEC's new project Crypto and how it's reshaping corporate Bitcoin strategies, with MicroStrategy leading the charge. We'll also uncover explosive news from Capitol Hill, where U.S. lawmakers are demanding a Treasury report on a potential strategic Bitcoin reserve. What does this mean for government-held digital assets? And finally, a chilling warning from D.C.'s Attorney General's office about a new wave of Bitcoin ATM scams specifically targeting our seniors. Don't miss a second. Hit that subscribe button, ring the notification bell, and join the Bitcoin Bulletin community now. Bitcoin is no longer just a buzzword in the finance world. It's becoming a strategic asset for corporate treasury management. Companies like Smarter Web are exploring how cryptocurrency payments can fit into their financial strategies, but it's not without its challenges. Volatility, regulatory shifts, and security considerations make the path forward anything but straightforward. Bitcoin is being recognized as a viable asset for companies looking to diversify their portfolios, hedge against inflation, and preserve capital in uncertain times. Businesses are not merely using Bitcoin as a payment option. They are incorporating it into their financial frameworks. By holding excess reserves in Bitcoin, they align their financial performance with the potential appreciation of the asset. High-profile companies are increasingly adopting Bitcoin as a major asset, with Smarter Web raising £2.6 million in a share placement recently, a clear indicator of their long-term commitment. But it isn't all sunshine and rainbows. The volatility of Bitcoin can lead to significant losses, especially for smaller firms without strong hedging capabilities. Regulatory uncertainties and security risks add another layer of complexity. To manage these risks, companies are advised to diversify their exposure, keeping it to a smaller percentage of their total treasury assets. Think along the lines of 1–5%. Having cash reserves on hand can also cushion the blow during market downturns. Companies that are mindful of best practices like diversification, dollar-cost averaging, liquidity buffers, robust cybersecurity, regulatory awareness, and transparent governance can navigate the challenges posed by Bitcoin while tapping into its growth potential. For those venturing into cryptocurrency payments, the regulatory landscape can be daunting. Compliance with AML and CFT laws is non-negotiable, as is adherence to securities regulations. In the U.S., crypto businesses are treated as financial institutions under the BSA and must comply with FinCEN's AML-CFT obligations, including robust AML KYC programs, state licensing, and SEC disclosures. As we move into a new era of corporate finance, Bitcoin's role is becoming more pivotal. Companies like Smarter Web are setting the tone by blending traditional finance with innovative crypto strategies. Don't go anywhere, because what's happening with corporate crypto strategies is about to get even more interesting with new SEC clarity. Next up, we're breaking down how the SEC's Project Crypto is reshaping investment for giants like MicroStrategy and what it means for fintech startups. Bitcoin has morphed from just a speculative asset to a real investment opportunity for businesses. Companies like MicroStrategy have been trailblazers, scooping up big chunks of Bitcoin for their treasury management. This trend is part of a growing acknowledgement of Bitcoin as more than just a digital currency. It's seen as a potential guard against inflation and a way to diversify financial assets. With the SEC's policy updates, particularly Project Crypto, corporate strategies around Bitcoin investment are bound to change. These updates promise clearer legal frameworks, which will eliminate much of the uncertainty around regulation. Companies can now assess legal risks and compliance obligations more accurately, making Bitcoin a more strategic choice. The SEC's simplifying of securities laws will help delineate what qualifies as a security or commodity, allowing companies to navigate the complexities of the law confidently. New rules supporting on-chain capital markets and tokenized securities create alternative funding options, and clearer custody and lending rules will reduce operational risks. fintech startups and established corporations should adopt best practices for treasury management, including positioning Bitcoin as a long-term reserve asset, using a risk-adjusted approach to accumulate Bitcoin gradually, funding purchases through non-dilutive financing, implementing dynamic conversion systems to manage volatility, and partnering with trusted custodians. The trend of relying on share sales to fund Bitcoin purchases has left investors with mixed feelings, with concerns over equity dilution and regulatory risks dampening enthusiasm. For SMEs in Europe, putting Bitcoin into payroll systems offers both opportunities and challenges. Potential benefits include attracting crypto-friendly employees and customers, lesser chargeback risks, and quicker cross-border payments. However, there are significant risks due to price volatility, regulatory uncertainty, and cybersecurity issues. Handling volatility for payroll budgeting, navigating different rules across countries for compliance and tax reporting, and implementing solid security measures against hacks and fraud are key challenges. But it's not just corporate boardrooms making big moves. The U.S. government is now getting directly involved in Bitcoin's future. Next, we're revealing the shocking details of a new bill demanding a Treasury report on a strategic Bitcoin reserve. Two sections of a U.S. House Appropriations bill filed Friday seek to require the Treasury Department to study the feasibility of a strategic Bitcoin reserve and outline custody, cybersecurity, and accounting for government-held digital assets. Reported by Representative David Joyce, the bill was approved by the House Appropriations Committee and placed on the Union calendar, making it eligible for floor consideration. Lawmakers now want the Treasury to determine whether a reserve is feasible and to spell out how it would be governed, from custody and cybersecurity to legal authority and interagency coordination. Section 137 of the bill instructs the Treasury to report on the practicability of establishing a strategic Bitcoin reserve and United States digital asset stockpile, including its impact on the Treasury Forfeiture Fund and the authorities that could enable asset transfers. Section 138 requires a 90-day plan covering custody architecture, legal authorities, cybersecurity protocols, and interagency procedures for digital assets held by the federal government. Kurt Watkins, founder of Watkins Legal, told Bitcoin Bulletin that if passed, this will mean the Treasury is tackling the exact same operational and legal issues every institutional custodian in this space faces. Once set, the Treasury would define custody standards, key management practices, and accounting treatment for Bitcoin at the federal level, with those choices likely setting a baseline for the broader industry. The provisions build on President Donald Trump's March executive order, which created the reserve in concept, but Watkins noted that the order left the mechanics vague. The bill suggests Congress is now moving to enshrine it into law and requiring the U.S. Treasury Department to fill in the blanks. Assuming the bill passes, Treasury has to lay out whether a reserve is practicable, how custody would be structured, what legal authority it would rely on, what cybersecurity protections would be in place, how interagency transfers would work, and even how Bitcoin and other digital assets would be booked on the government's balance sheet. The bill now awaits consideration on the House floor, where its progress will hinge on wider negotiations over federal spending. But while lawmakers are strategizing about government reserves, a concerning trend is emerging that directly impacts everyday citizens. Stay tuned as we expose the Bitcoin ATM scams targeting seniors and what you need to know to stay safe. A new wave of Bitcoin ATM scams is targeting seniors, prompting a warning from DC's Attorney General's office. These scams often involve fraudsters impersonating trusted entities, like utility companies or government agencies, and demanding payment in Bitcoin via ATMs. Victims are typically instructed to purchase Bitcoin at an ATM and then send it to a fraudulent wallet address provided by the scammer. The urgency and fear tactics used by the perpetrators often leave elderly individuals vulnerable and without recourse once the transaction is complete. The DC Attorney General's office is urging residents, especially seniors, to be aware of these deceptive practices. They emphasize that legitimate organizations will rarely, if ever, demand payment in Bitcoin, especially through an ATM. Common tactics include threats of arrest, service disconnection, or other severe consequences if immediate payment is not made. The anonymity and irreversible nature of Bitcoin transactions make them attractive to scammers, as once the funds are sent, they are virtually impossible to recover. This trend highlights a critical need for increased education and awareness regarding cryptocurrency scams. Authorities are advising the public to verify any suspicious requests for payment, to never share personal or financial information with unknown callers or online entities, and to report any suspected scams to the authorities immediately. If you or someone you know has been targeted by such a scam, contact the Attorney General's office or local law enforcement to file a report. That's all the news for today, but stick around for a lightning round recap and your chance to join the Bitcoin Bulletin community. And that's a wrap on today's Bitcoin Bulletin. We covered Smarter Web's innovative crypto treasury management, the SEC's impact on corporate Bitcoin strategies with MicroStrategy, U.S. lawmakers pushing for a strategic Bitcoin reserve, and the disturbing Bitcoin ATM scams targeting seniors. Don't forget to like this video. Subscribe to Bitcoin Bulletin for more essential crypto news. Hit that notification bell so you never miss an update. Drop your thoughts in the comments below and follow us on all social media platforms.